Today we are going to learn about CST. What is the meaning of CST? CST means Central Sales Tax. So when there is a levy of CST, CST is nothing but it is a sales tax when there is a purchase or sale between two different states. There will be a levy of CST. So friends, what is the meaning of CST? When there is a purchase or sale between two different states, there is a levy of CST. From where this power is got? The power to levy CST is with the central government, and same it is drawn from entry number 92A of Union List to the 7th schedule of Indian Constitution. So the central government got the power to levy CST from entry number 92A of the Union List to the 7th schedule of Indian Constitution. However, the central government has allowed the respective state government to levy and collect the CST in their own names. So which state is going to sell to a product to another state, there should be a levy of CST to the respective state government and levy and collect the CST. Okay friends, just we saw what is CST and the power to levy CST. Now let us consider a small example so we can understand the complete. Let us consider a small example to understand CST and its levy. From our example, Mr. A in AP and Mr. K in Karnataka. So Mr. A sold goods to Mr. K from first point, and Mr. A billed to K, that is sale value 100 rupees and CST at the rate of 2%. So now total amount is 102, and later Mr. K made a payment to Mr. A, that is 102 rupees. Mr. K paid to Mr. A rupees 102. From that 102, 100 rupees goes to Mr. A's own pocket, and 2 rupees, that is a 2% of CST, goes to the originating state government, that is it is in our example it is a AP account. So to understand this example and what we learned about CST, we need to understand some terms, that is what is good. What is good? The term goods includes any article or material which is movable as per Article 366 subsection 12 of the Indian Constitution. Now, as per Sales of Goods Act 1930, any property which is movable can be considered as goods. However, the following terms or goods are not treated as goods in Sales of Goods Act. There are actionable claims, newspaper not in scrap form, and the currency. Now, as per CST, shares and securities, however it is a goods, but as per CST Acts, shares and securities are not considered as goods. And what about electricity? Electricity is no doubt it is a good, but there is no levy of CST when there is a sale or purchase between two states, the good electricity. What is sale? If the following conditions are cumulatively met, then we can say there is a sale. So friends, what is sale? If the following conditions are cumulatively met, then we can say there is a sale. What are those conditions? There should be a two parties, namely one is seller and one is buyer, and there should be a contract for sale between seller and buyer. Now the above contract should be for transfer of risk and rewards to the buyer, and the contract should be supported with a consideration. If these four conditions are cumulatively met, then we can say there is a sale. However, as per Indian Constitution, the following are treated as a deemed sales. What is those? A. Transaction of lease. B. A transaction of hire purchase. C. A company compulsory acquisition and works contract. Sale of food by hotel. All those are treated as a deemed sales. When a transaction is taken as a sale or deemed sale, then there should be a levy of VAT or CST. What is declared goods? Now, what is declared goods? Those goods which are specified in section 14 those goods which are specified in section 14 of the CST Act 1956. Those goods are known as declared goods, right? Those are also known as special imported goods, and the maximum rate of the declared goods cannot exceed 5% as per central government. And we can see some of example what is declared goods. Our daily using rice, sugar and domestic LPG gas are some of the examples of declared goods. Now in a case when there is a dealer makes a purchase of declared goods and subsequently he makes a sale of the same goods beyond the state to the registered dealer, then entire VAT paid earlier on the purchase of declared goods would be refunded back if CST sales is taxable. CST sales is taxable. If CST sales is not taxable, then there is no refund of VAT. Now let us consider a small example for this. See here, Mr. A sold goods to Mr. B, that is intrastate, therefore a VAT sales, and Mr. B subsequently made a sale to Mr. C of Karnataka. It is a CST sales. So it is a taxable and it is a made a sales to the registered dealer, that is Mr. C. And here Mr. B gets refund of 5% because he again made a sale to another state and paid CST at the rate of 2%. From this example we can clearly understand what is declared goods and how tax treatment of declared goods. Now what is the rate of CST? CST rate. If sale is made to a registered dealer of another state, if the buyer gives C form to the seller, then CST rate is called AP VAT rate or maximum CST rate, whichever is lower. And if no C form is obtained, CST rate is called to local VAT rate. And if sale is made to an unregistered dealer of another state, CST rate is called local VAT rate. So consider this diagram.